All right. So good morning, everyone. Good evening and good afternoon. Thanks for joining in today. Welcome to the FS Street Tokyo Open Live Room with me, Giuseppe Basile, also known as the FibStalker. Yes, I'm a stalker. I admit it. I stalk using Fibonacci, which should suggest to you that I don't stalk people. In fact, I promise I will not stalk people. I will continue not stalking people. But what I do is to stalk price using a variation of Fibonacci. And that justifies that name there, the FibStalker. So thanks a lot for joining in today. It's a new week. It's a new season, indeed. Happy spring to everyone in preparation for Easter. This is a very important um, um, period for a big bunch of people on the face of the earth. And welcome today. This is a daily show, and we actually feature real trading at the very heart of the Asian session. I see there is a lot of intimacy today. We are only a little bunch here for now. Welcome, Greg and Mervin and Lee. Welcome, Desi. Thanks to Desi and Mauricio for setting up this show. You did a great job, guys. Welcome, Sinatra, Forex, and Kerry. So thanks for joining in. As you know, this is a daily show from 7 p.m. to 7:45. Trying to save a couple of minutes here to let people coming in. And as you know, in this show, we take risk seriously. We take risk seriously in trading business. Hi, Kerry, welcome. And the reason for that is that trader's job number one is minding risk. Once you've done that, you are well beyond halfway of your path to success. And you have to trust me on this. Now, trading is risky, and trading Forex and its derivatives like futures, options, CFDs, and other instruments with retail of exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment, and I'll tell you something more about what it means to lose all of your initial investment. Hello, Pankai, welcome. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review FS Suite risk disclosure on the website. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. The speaker, I, an author of this material, is merely providing you this material for your general information and educational purposes. Giuseppe Basile, FibStalker Consulting Incorporated, and FS Street will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. All right. Hello, Marco. And so, again, take risk very, very seriously. If you do that, you'll see that your trading and the way you face trading and your level of confidence will go up, your level of pressure will go down, and there are only plus when it comes to doing this. Now, a little announcement here. You know already that the time has changed. It's going to be always 7 p.m. EST. So 7 p.m. time in New York and Toronto. So this time is not going to change with the change in time back in Europe, because what happens during this period is that we have 2 weeks of of actually time change in North America, and then the Europeans eventually catch up. I don't know why in a global world that has not been solved yet, but it is what it is. We like our locality, if you wish, and this is what we're getting here. Now, I also want to say that next Wednesday is going to be my last day in this first session. We kind of closed our winter session, and we're gonna take a little break and then open our spring session. And our spring session is gonna open again in April the 11th. So you need to be a little patient and keep doing your own analysis for a few days, and so we will then come back eventually on April 11th. So be patient with that and keep your interest high. How could your interest go? Really decrease, right? I mean, we're talking about the market here. What I want to say here is that sorry, I'm going up and down here on these slides, but I want to briefly focus on this. I want to tell you that I've launched my May 2016, officially launched my May 2016 coaching program that I'm going to start live in May, but this program is made, it's a 12 months program made of 3 parts, and the first part is self-study. So the earlier you get in, the more you will get, but in terms of knowledge, so that when we start our 15 live webinars, you will have certainly will be more prepared to ask questions. And my challenge in setting up this this coaching program has been to show that trading can be taught, and it can be taught also when doing actual trading. Actually, I did. This week is going to complete a period of 12 weeks that I spent with some of my students in my FibStalker trading room. So if you join within April 2011, you're gonna April 11th, 2016, you're gonna get also access to my FibStalker trading room for 3 months. So if you're interested, let me know. I can give you more details about this program. It is now at its 4th session, so has been around for some time, and I can say it has been also quite successful when I listen to the feedbacks from my students, and sometimes their excitement as well. So welcome everyone. Just taking the opportunity to say hello to you here, and let's do what we love. Let's do what we love, which is actually diving into our charts here to do a full review for this week and see what this market are going to bring us. And I mentioned last week, I want to start from, let's see who's here in the room. In the meantime, I hung around a little bit to allow other serious traders to come in and join us. So welcome goes to Pantelis. Hello Pantelis, to Marco, Sinatra, Greg, Desi, Pantelis, Mervin, Lee, Punk, Joe, Kerry. Welcome back. You are the men, yes, and as well as women, because let's not forget that there is a growing number of traders who are ladies, and I think the current statistics 8% of traders, and it's in increasing. And we all know that that women are much better than men in trading because they lack the macro factor. So let's get into this market. And what I promised last week is that I would start with the euro pound. Actually, the euro pound has offered a great opportunity for re-entry. So my bet, I don't well, I don't follow this market a lot. Okay, this is a European, full European play here. The point is, this market in the past has not been very technical, but man, it is being very, very technical at this stage. And in fact, it has responded to the next measure move short. We anticipate in this market, believe it or not, we anticipate a pound being stronger than the euro dollar. Sorry, than the euro, of course. And why we say that? Because we had a level here, 78.80, that has been now tested for the third time successfully. What you see on the screen here is the weekly time frame. And although this level is not precise, 78.80 area has been tested 3 times. The first time back mid of February, and then the second time end of February. And then again, we had a test last week. And someone, I think it was Mervin or someone else, asked me, and when I was asked, that was Thursday, but this market on Thursday had already tested this level, which happened on Wednesday last week. So I'm going to review that. But this market does not lie. This kind of behavior does not lie about this market. This market is ready for a dive here. That's what I see, right? Level rejected 3 times around a very, very important weekly level. Little doubt here that this market is actually going to do something different from actually correcting and correcting downwards. It's not really a correction. This is a continuation of the trend, believe it or not. Why? Because the trend is down. And although in the last few months we have seen this market rallying higher into that level, there's no one who's going to convince me that this market is moving higher, at least for now. And so my suggestion here, looking forward, because we always do this analysis to understand how we can take advantage of it. Otherwise, I mean, all this it's totally void and non-useful. Actually, it's a waste of time. Would be a waste of time. So obviously, if this 78.80 is retested again, we want to get involved on a short trade here. Okay, so keep that in mind, write it down, keep that on a note in your drawer, and take it out whenever you're analyzing the market, so whenever you open your trade station. And of course, that's the only thing that we can see when we look at this market on this weekly time frame. When we look at the daily time frame, everything becomes even clearer here. And now, this market also gave a clear signal on the daily, and this market has traded this area long and then went to the first target, and then the next measure move failed. Now, what if this market on this time frame? Can you see how I do the analysis on all the time frames? And then we only decide based on which time frame we want to play. So if this market actually comes back to test 78.42, and being very honest with you, this would be a gift from this market. Well, that's a level where we want to get involved short. All right, and that's an area that it's of obvious interest to current shorts. And of course, this market could continue lower. There was participation on that weekly time frame, which is actually pushing price lower. We can see that we can say that there are no weekly time frames which are trying to pull this market higher. Forget about that. There is nothing like that, in my belief. And although, of course, I'm not always right, I would say that given the participation we have seen at that previous 078.80 area, I would say that it's very, very difficult for this market to go and retest that level. All right, now, when we look at the 4-hour time frame here, there is an area of potential participation long. Will that area of participation long be capable of pushing this price higher? I don't think so. It's there. There is some participation, which shows you there are different classes of algorithms that actually pull the market up and down in different time frames, and the result of price, sorry, the price is always the result of algos or some classes of algos, as well as the results and effect of the psychology of the market, which can be described as the average behavior of traders taken as a group, pulls this market up and down in different time frames. And so the price is the result of all these participants pulling up and down this market. So when you analyze the main force that all these participants put on all the time frames, from the largest, the weekly, from which we always start, down to the 1 minute, where we end, when we have to do our timing, we get quite a pretty good picture of what price could do next. Of course, if there are no there's no government intervention, central banks and other geopolitical events that can skew the picture in the short term. And we have seen an example of that 2 weeks ago with the euro dollar. And we have seen some storms, short-term storms last week as well at the FOMC. But when things then calm down and, the wind goes down and everything comes back to normal, we really see how we can see and touch how algorithms are actually positioned in this market, and that's a beauty. So on the 4 hour, you should keep in mind also the 78.26 level. Good evening, Scott. On the 24 minutes, so the 4 hours, you should also keep in mind that 72.26. As you know, as we always say, and you should always remember, we never blindly buy or sell these levels. These levels are very important to us. Okay, but we take them into consideration only when they are aligned with the path of least resistance, and we always test them. We always want to see that the opposing measure move that brings price into this level, on typically, with activity of the algorithms on the smaller time frame, fails at those levels, which is an indication that the larger time frame is in control. All right, so as you can see, as you can infer, or you can imagine, this procedure, this technique is procedural, and that has been my challenge in the last few years, to try to put together a model a system first that would work for me, and then try to recover some lost time, saying, why is so difficult to learn all these things? Why is it possible that the huge conflict of interest in this industry doesn't allow retail traders who are serious and put their mind into this to actually consistently or regularly winning in this game, or if not winning, at least properly managing, learning to properly manage risk. Because see, someone who could come to me and say, you're just a retail trader. Do you want to win in this game, really? And of course, now I know I can answer yes. It's very possible to win consistently, but wouldn't it be fair that if everyone would be in a position to be capable of at least managing risk? So I'm not even asking to make gains, but at least to be able and have the tools to manage risk. The conflict of interest in this industry is so big, it's huge, that in reality the industry keeps pushing the same old methods that in my belief are not sufficient to actually propel this activity into a long-term business. And I think I've talked about that somewhere else. For me, a long-term business is something that lasts more than 3 years and more than 5 years. You know that 90% of any business in any industry, 90% of them die before the 3 years, and only 5%, which means 50% of the remaining 10% that makes it beyond the first 3 years, make it beyond the 5 years. So if you're serious about your trading, you should consider your trading a business. I deeply and heartily suggest you do. And so the business in this euro pound is to mind what is going to happen on the 4 hour on the 17th. I'm not going to go down into the other time frames, but this could actually this market could actually bring good opportunities if the market gets there this week. All right. So if you have any questions on this market, I made this analysis a little bit longer because I wanted to bring home some of the points here. I have FX ambassador there. Hi FX, saying the algos are causing a lot of the volatility, which is good. I think volatility is good. Volatility is not risk, because volatility can be positive risk as well as negative risk. But what is really negative risk, right? I mean, if you manage risk properly, and size your position in a way that is reflective of a risk, which is not an absolute number of pips. I still see a lot of traders who actually pick an absolute and totally arbitrary number of pips, absolute number of pips, 20 pips, 15 pips, my risk is 12 pips, 15 pips. And usually the way they pick this number is based on the ATR, average true range, or any other local measures or volatility. The reality is that the risk in the market changes, yes, with the volatility, but more than the volatility, with the extension of price, which is in a way, it's a measure of volatility. There are different definitions of volatility. Volatility definitions that relate price movement to time. Volatility that relate price movement in a period of time compared to previous averages or similar period of time. The reality is that your risk should always reflect the way the market is moving at the moment. And volatility is not necessarily bad. Bad risk management is bad. And volatility can be something very, very good. I mean, I was not positioned on the upside in the euro dollar last week because indeed the market, that market started moving lower according to our positioning. But if I was positioned on the upside, that volatility was a positive volatility. So let's check quickly the SP 500 here. If there are any questions on the euro pound, please write them down. I'll be very happy to answer those questions. And nothing has changed here intraday, of course, in this market. It just opened here. So what we know, though, is that that level that we had a level last week, which has changed, and I'm going to update the level very quickly there. And we're going to see, if you're going to see a reaction in 2020 here, we're going to see this price moving higher, which is always something nice we want to see. And so this market is moving in extension, and will move in extension until it does not move any longer in extension, in which case it will reverse, and we will need to see which kind of reversal we get. If we get heavy selling, then we should be more careful. if we get a mild reaction, but this is not going to be a mild reaction anyway. There's going to be profit taking in this market, okay? If that sequence fails, and that's what happens every time sequence fails, sequence fails, sequence fails, sequence fails, and so on. So let's do not look for a different behavior, because when algos are not pushing this market higher, they're pushing this market lower, or at least they're not pushing this market higher, which means that the ball passes to the smaller time frame. And so we need to check whether the smaller time frame is going to push this price higher and lower, and so on. So it's a kind of Russian dolls that develops. Dollar index. Dollar index is into and very close to that area that we know has been tested for a number of days here. So if there is one market you want to keep an eye on this week, that's definitely certainly the dollar index there. Okay, and the dollar index has been pushed lower starting from that 98.10 level there, and we know that we have this area that we have to test here. After the area is tested, we will know the truth about this market. Now, if we make very simple consideration here, we would see that we had lower lows. I wouldn't be worried about that at this stage until that's confirmed, because we need to have lower highs. Of course, we need to have lower lows to start saying something about it. But for now, this is just lateral move, which lasted basically for 1 year, on top of 94 area, 94.30 area. Okay, so let's wait this week. Let's don't get panicked. If this market finds a reaction at this level, we're going to move higher again into 98, which would suggest that previous highs in the euro dollar are going to potentially push this price back lower into the range here. It's still into this range, right? And last week we said maybe we know the level that has traded last week. We'll identify that after the fact, not before the fact. But maybe we know what has been trading here, right? And the point is that now this market is confronting previous highs. There could be some overhead supply here. We don't know, and we don't try to actually guess what is going to happen here. What can we say though is that this market looked very, very extended here, and there is still a possibility for this market to get into that 113.88. I read on FS Street 114. It's all around this area. Okay, so if that's the case, this market has to reverse. If this market has to go to 113, 114 here, 113.80, 114 this area here, we need to find a way to have this market get in there. And my way would be, if this market tests to 112, I think we're going to see a potential continuation higher there. So this is the opportunity for today. Sorry, this week, probably. Yeah, between today and tomorrow, we might actually see this area being tested for a continuation long. Into what? Into that 113.90 area there, 114. Some people are invoking even higher prices. Of course, the market can go higher, but it needs a setup to go higher. All right, any questions in relation to the euro dollar or the dollar index? I think you're following the picture there. So before I was talking briefly about the coaching program that I'm launching. If you are interested and want to get more information, you will let me know. You can drop me an email. And as you know, everything I do, it is under a strict risk control, which I believe, as I mentioned always at the beginning of these sessions, when I read the disclaimer, it's paramount in the trading business. Your challenge would be, for me, for what I observed, in my own trading as well as the trading and learning of other students, is to be capable of doing a mental shift. And that mental shift, it looks very simple, but sometimes it's difficult or requires time to do, and it is to basically shift the focus from gains to back to risk. And if you do that, if you just worry about risk without worrying about gains, you will find yourself in a situation where your total focus is on protecting your capital, which does not mean that you have to forsake or forego um, uh, gain opportunities to make money. But it is that approach and mental shift and paramount care of risk management that allows you to protect your capital when things go wrong, and allow you to keep consistency uh, and to keep your consistency when things go well. All right, because there are some times in which the market simply does not offer opportunities or stops you at break-even very, very often. So if you don't have an approach that allows you to manage risk properly, you're not capable of managing the situation and holding on your capital when things do not go well, and allow you to stay consistent when things go well. All right, so let's continue here. So this is my projection for the euro dollar, and as you can see, I give this level always days or weeks sometimes, or hours in advance, so you can take advantage of that. Someone sent me an email on Friday celebrating the move higher in silver. Yippee, yippee yee! So it's obviously it's obviously a pleasure, as seeing this market pushing higher. The open here is a little bit uncertain, but this market has broken higher highs here, and it is trading solidly in sequences here. So I'm not worried about this market at this stage, and uh, participation around 1522 target hit, and this market has still to test the next continuation there. So we will see what happens there. You don't even know if it's going to get there. It's going to get there. There should be participation. If not, there will be participation below. So really, there's not really a lot to worry about this market. Gold has been relatively weaker here, and it's moving laterally on top of support here. I anticipate for gold, so both silver and gold are in similar situation, with the difference that silver is actually moving in a sequence higher, both on the daily and the 4-hour, while we see gold actually moving laterally here. This is a typical pattern here, the FibStalker sideways pattern that I explained to those of you who will join the coaching program, and I'll explain you how to identify it on all time frames, and how to trade it or not non-trade it, and also what we can anticipate when we see this kind of movements, right? So this market is moving laterally. So silver is in a sequence of moves higher, while gold is actually in a sideways pattern here, and we should not expect a lot from this market in terms of big moves, unless it breaks down, and in which case it's going to go begging through that 112 and keep moving between 112 and 113 here. All right. Any questions in relation to this market? Let me check the window there. We have someone else coming in here as well. All right. Okay, so let's move into the US dollar Canadian dollar then. Let me also do a time check here. So I will review this market. If you have any other markets you want me to review, write them down because time is a scarce resource, unfortunately. I see a triple bottom in US dollar, Japanese yen. That's not a triple bottom. That's a break of the lows, and you know, I don't see a triple bottom. I see a break of the lows there, and we will see what happens there. At the moment, the euro is still pushing higher, so there are no reasons to believe that this market is going to make it. If this market was to is Todd here, by the way? Because I think Todd is the one who from the three bigger banks in Japan, who actually were saying that this market had to move higher. Look at what the market moved, actually moved lower. So, if this is not manipulation, you tell me what it is. But FX ambassador, there's nothing to do in this market at this stage. You can surely you can risk to actually try to push this price higher, but that's not a configuration that I like. So I leave that to you. I don't believe that's a good choice personally. But in this business, we are paid for the quality of decision that we make. I think that there are better setups in these markets, much less risk. If this market just continues lower, there is nothing to there is nothing to so there's nothing to risk here really. I'm targeting a continued move lower in this market at the moment, right? So you can do that at your own risk, but that's the beauty of very good. I do that as well sometimes, but I trade this market as well. There is FX ambassador that is saying I don't trade the US dollar Japanese yen. I see it as a reference pair. That's a very good approach because some of these pairs can be paired together and they can offer information. For example, I paired the US dollar Japanese yen to the euro, and they think that they give a lot of good information. I was just saying that I wouldn't consider a long in this market as a triple bottom. That's it. I mean, I'm not. All right. So US dollar Canadian dollar, and then we close this market. I respected beautifully that setup. If you want to review that setup live, you can go to my contributor page to the webinars and review the webinars of, I believe it was last Thursday. And this market has not reached targets there, so don't be fooled by this move higher. The maximum this move higher can go, and it is it is moving through the all the way halfway back here. but that's the maximum that this market can do, really. And that would be a gift. I believe that would be an opportunity for a continuation short into the second target. We already talked about this market last week, so there's not really a lot to add. The analysis is still the same, so you might want to review that analysis as well. All right, we do a time check here. It's 7:40 here. So what I'll do, I'll start a recap and a summary for the session right now. And we started from the euro versus pound, which I have here, and we mentioned the triple test that this market has had against the 78.80, a little bit lower, 78.70 level here. 1, 2, and 3, mid of February, end of February, recently, mid of March here. And this market has the potential to continue a move lower. We gave, when you review the full show, we gave a level 78.40 in the daily and 78.26 on the 4-hour for a continuation short. FX Ambassador is commenting there, some markets are being manipulated now big time. There are some people who do not believe that it's possible to manipulate Forex. The excuse they bring forward is that it's fragmented markets with tens of prices and tens of institution banks and brokers and operators in the middle. But the reality is that the games are made by 9 to 13 big banks and institutions. So I believe that is still possible. And when we look at these levels and the way they work very well, you have to ask yourself, why they work so well. There are two ways. There may be only two ways why they work so well. Either they capture something fundamental about the market, or they're brought about by algorithmic trading. So well said there, FX Ambassador. So let's continue here. After that, we reviewed the SP 500, and we mentioned that this market has the potential to test the 2020 and then continue higher. That's our level of reference for this week. Again, I'm identifying this level with 1-2 days in advance here, and you have them there. Bank 2020. If we get participation there, use the FibStalker timing technique to verify whether that level is going to hold or not. We then reviewed silver. We mentioned that silver is moving in a sequence of measured move on the weekly, long, on the daily and on the 4-hour. What a beauty. And on the other end, on the other side, gold, that has moved a lot in February, is now kind of catching up with time and moving laterally, which is a lateral correction. It's a time correction there. All right, so after that, we briefly reviewed the the dollar index, and we mentioned the fact that now this market could be pushed lower into that 94.30. That's a level to watch this week. See how many levels there are this week to watch, and that level, the 94.30, is certainly a very good level to look at. This week is very, very interesting. There are a lot of area to watch. And the euro dollar, if the dollar index is still moving lower and there is still a little room to move into that 94.30, maybe the euro dollar has a little room to keep moving higher into that 113.90. One is invoking even higher prices, but I don't believe that we're going to see those higher prices immediately. Of course, anything can happen, but that's my view. And we then closed with the US dollar Japanese yen, mentioning that visually we see a third test of of this level here, but to me this is a violation. So I'm not looking for continuation higher here. Some people might say, you know, stop hunting and all this stuff. That's okay. We need to see the US dollar correcting lower significantly in order for this market to make it higher. And of course, you know, all my dreams of glory and possibility of, you know, seeing next measured moves here are becoming less and less probable here. This market could just drift down lower into that 170. And if that happens, we have a way in our intraday system to capture those kind of situations. So I've worked almost 3 years to find a way to kind of participate to markets that keep screening lower or higher without giving us a FibStalker level. So I you know, I was you know, took a lot of time to fill that gap, but that's interesting now. And finally, we close with the US dollar, Canadian dollar. Really not a lot to add in this market. We mentioned that if this market gives us a gift, 131.60, this is going to be you know, this is going to be a gift from this market, and we're probably going to see a continuation lower into 120.70. So I gave you a lot of levels in this review. I hope you enjoyed this review, and only with these markets, I mean, we could do very, very well this week. Even if one or two of these levels trade, actually we should be in a good position to actually take advantage of these opportunities here. Yeah, a few things moving, so it's really up to you. The levels are up there. It's up to you to you know, use your tools and whatever you have in your arsenal in order to verify those levels. As you know, I have the FibStalking timing technique, which is a procedural technique that uses the presence of algorithms on the smaller time frame. And when I take the opportunity here to remind once again that yesterday I've launched my my new session of the coaching, the FibStalker Methods coaching program, which is a complete approach to successful trading. And these are all the main areas that, and much more that I address in the coaching program. The mechanics of trading, developing a trading system based on the concept I'm going to provide you. I will give also 7 trading systems based on this concept, which you can use right away. And most importantly, we will I'll show you techniques to reduce risk or zero or actually zero your risk, and also a way to create profitability and consistency. So I hope you enjoyed this session. I hope it was useful for you. I hope you have written down those important levels that this week we're going to see in this market. There's going to be other levels in other markets as well. I think it's going to be a very interesting week, and you know, it's lighter in news compared to the last 2 weeks. They were very heavy, and we will see what happens and what the market brings to us. And we always, you know, face Sundays with anticipation, not expectation, but anticipation, but with an expectation of managing our risk in the right way. All right, so thanks a lot for being here. I wish you a great week, trading week or non-trading week, and I'll see my students tonight at 2 a.m. EST for our FibStalker trading room. Thanks a lot, and see you tomorrow, same time, 7 p.m. EST. Bye-bye now.